I'm Ashton Addison from Blockwest Capital for Investment Pitch Media and the Crypto Coin Show. And today on Blockchain Interviews, we have 0xDorsal, co-founder of Integral. Dorsal, welcome to the show, and thank you for taking the time to come on.
Wonderful. Thank you for having me, Ashton. Pleasure to be here.
You're very welcome. Let's dive into decentralized exchanges, big players in the space also needing to move their capital. I'd love to kick off our conversation by just allowing you a little bit of time to explain what is Integral, this entrepreneur journey you came through and why you started it, and the pain points that you see in the cryptocurrency market that you're solving, and then we'll dive into the details.
Yeah, sounds great. So maybe I'll start with kind of what is Integral more broadly. So we actually, we're focused on providing on-chain infrastructure for basically future trading needs, right? So like spot trading specifically is what we handle. And a lot of people describe us as a decentralized OTC protocol on chain. So specifically, we have two products right now. One is called Integral 5, which we launched just about a year ago, a little over a year ago. And Integral Size, which is maybe more like 10 days old. So that's, just happened to be about a year apart. But basically, these are, down this line of, hey, like what do we need when large traders come on chain? What kind of specialized, DEXs and other financial services do they need when liquidity needs to be deeper and more effective? Basically to serve just this, the fact that they're doing, 6-7 digit trades and up, right? So one thing we offer is with our products is the benefits of minimal as well as zero price impact block trading at the best prices on chain. So happy to dive into that a bit further. But maybe going back to, why are we, working on this in this area anyway, as a core team? At this point, about a year, I guess we've been 18 months in, so if we count, building in stealth. We're a team of about 18 people in the core team now, and really just aligning behind this vision of, hey, guess what? There's this underserved area of DeFi on chain. Everybody, I think there's a lot of narratives about institutions coming to chain and bringing a lot of these trading volumes they need with them. But right now we really, don't quite have a lot of the infrastructure required to serve these efficiently. And that's why I think anywhere between about 95 to 99% of crypto volumes still happen over, on the centralized exchanges eventually, passing through OTC desks and execution services, and they all end up hitting their CeFi or other methods of off-chain trading. And we have a long way to go if we want the on-chain future to really be kind of what we look at as DeFi grows. So I think that's our motivation. Personally, my background in crypto, like my bulk of my crypto existence has been actually as a trader, building quant systematic trading systems, building crypto hedge funds. And one of the things we, sat front row to on that journey was basically seeing how startup centralized exchanges kind of, grew. And some of them failed, some of them grew much larger. I think everybody in the space who's new might forget that Binance, for example, is, the big 800-pound gorilla in the room for centralized exchanges, but it was a startup in 2017, right? So I think we have very much a similar moment with, serving kind of large trades on chain right now, which is like right now, when a large trade is executed, a lot of that is being happening on exchanges like Binance, right? And you have this whole layer of niche white glove services that kind of help, for lack of a better term, like, these whale clients in crypto, like kind of pass that volume, elsewhere. And what personally inspired me kind of when and a lot of members of our team when we kind of touched these protocols as early adopters in around the time of DeFi Summer 1.0 in mid 2020, is that like, hey, there's this whole trading environment that's now possible on chain, kind of with the rise of, I think, Uniswap V1 and V2 when that came out, and other protocols like Compound and Curve and Wiren, was really like, hey, we were starting to get a lot of the like first wave of tools that make this kind of make different centralized exchange functions possible via different protocols, right? So you can borrow, lend, you can do spot trading. Kind of with Integral, the idea was like, look, like for larger trades, like maybe we should have something that resembles more like block trading and actually what OTC desks do for you, but can we actually do it in a democratized peer-to-peer way where we kind of cut out this layer of like having to talk to a professional OTC trader like on Telegram or something that resembles almost like Bloomberg for those TradFi people who are listening. Like that's literally it's how a lot of TradFi trades and realize like, look, how would you do this on chain directly? And that's, I think, that's the approach we ended up taking, which is like, look, we think we can tackle this with direct tech and protocol design. So happy to dive in there now. I think if that's probably what your listeners are wondering next, or anything else. Kind of.
Definitely. Thank you for the great intro and the background information. I think that really helps paint the picture for how centralized exchanges have grown so quickly, and the decentralized exchange movement is growing, but there's still those pockets where, as you mentioned, for integral size or for whales or for big trades, how can you do it as efficiently on chain as you do in Binance or some of these major OTC desks? And from what I've seen, many traders that are trying to use decentralized exchanges like Uniswap, I feel like if you were a whale and you had a large block of capital to trade, there's a lot of limitations on the decentralized exchanges, like you're buying at the spot price, and if you have a lot, it'll probably move the price 10% if it's a small coin, or even more. How do you deal with those liquidity issues, and how do you do it securely? Maybe you can talk a little bit more about integral size and how you've positioned that successfully for whales and large traders.
Yeah. Happy to dive in here. I would say, like, first I'll go through like the challenges that larger traders face, kind of when they do their stuff on chain, and then I'll kind of paint how we address these challenges within our designs. So kind of one issue with so I would say there's probably two practical issues with large trading directly on chain. So the difference between an OTC desk and on chain is that now your orders are run through, on Ethereum, for example, it runs through the mempool. And this is where front running is apt to happen. Some folks out there might be familiar with MEV, which is just the process of the fact that kind of traders that are aligned with miners can, and sometimes it's the miners themselves, can actually, reorder transactions within a block. And so this is kind of a big weakness for a lot of these kind of spot dexes that settle right away, which is, a lot of these large trades are very nice, juicy, targets for being sandwiched or, other types of front running. So just-in-time liquidity is kind of another type of attack against this. But basically the idea is, look, like somebody's going to push up the price before this organic large trade, and then they're going to dump after, all within the same block. And so this is what makes a lot of larger traders like uneasy when executing on chain. So kind of a second issue is just like the fact that large trades themselves actually move the prevailing price on the price curve, like right away. And so we sort of, we try to address both these issues by basically combining the fact that, hey, like when large traders transact, really what they're agreeing on with their counterparty is like kind of they need to agree on a price, and they need to agree on what kind of like, sourcing the right amount and settling kind of at the end of a certain, time period. And this is kind of what happens, when traders go to either OTC desks or, liquidity pools kind of in TradFi, or, like I think a good example is out there of block trading is in crypto, or is it Gemini? So Gemini has if I recall, it's about a 24-hour auction period for, I think best known for actually selling, auctioning off, FBI confiscated Bitcoin. I think if anyone recalls, that was one of the first big use cases for it, and people would, enter into these block trading procedures with, kind of with the procedure being known ahead of time, how you arrive at that settlement price. So we do that the same with Integral, like Integral 5 and Integral Size are both this way as well. Size is the simplification, so I'll describe that. But basically, we think of the perfect, trade as like literally, hey, we specify, look, what's the reference price prevailing in the market? We specify, which is right now it can be, typically it's Uniswap V2 what we use. But I'll note that like SushiSwap is also usable here currently in our designs. And so we sort of set this for you in the trading pair. And then there's a time lock procedure, which you're committing to when you trade, and when you're being the counterparty as the LP, you're also committing to this. So right now that's 30 minutes on Size. And what happens during this 30 minutes is we look at, so basically the infrastructure pulls in what the reference price is doing during that 30-minute commitment. And at the end of that, once it's elapsed, your as the trader, your funds are basically, released from this time commitment escrow and actually, traded directly against the pool you want to that you're trading against. And, that's where the LPs are kind of being the peers that are serving, now this block trade. And so everybody kind of has to, commit to doing this organic trade for a 30-minute period that they might not know what the price is, right? So this is how we screen out a lot, pretty much, all the front running that happens in the space, as you can't do a lot of these tricks that happen on kind of spot dexes. So in this way, we keep the price low for everybody. And maybe zooming back out, how we think of our design is that, through this organic trading time commitment and this block trade mechanism, and the fact that now we can match people directly on the prevailing time-weighted price that happens on Uniswap without actually without even having a pricing curve, right? So we actually allow people to trade directly at that price for whatever depth, potentially whatever depth the pool is at. So we have our own primary liquidity from our LP users, and we have our traders coming in and being matched against them. And what's missing now, compared to the spot trading environment on normal dexes, is that there's no third party called arbitragers. So the arbitrage traders are, notably absent from this picture. And a lot of the profits that they take and demand basically for updating, Uniswap or, SushiSwap or these price discovery dexes are basically, relying on this breed of trader to kind of update the prices, throughout, as block time passes. And we sort of position ourselves to not redo that again, but rather to use, leverage what they already use, kind of the price discovery they already maintain, and say, hey, let's, we're not trying to reinvent price discovery. We want to use best price discovery that already happens on chain, but make that available at better depths, right? So really the question we answered was, what if we could make these ideal prices, tradable at larger depths? Why do you have to slip down a curve? Now you don't with Integral Size, and that's the direction we're going. I think we've already served our first $1 million trade on Size in the past week, and on Integral 5, which was sort of just to keep it short, it was a little bit more complex than size is now. We actually had a aggressive and configurable price curve, but that ended up being, overkill, I think, for the point of both decentralized and simplified protocol design. So that's something we ended up sort of like dropping and flattening out, and that's how we ended up with just, instead of minimal price impact, just flat out zero price impact design, which sort of, we dropped one ingredient that kind of made things more complex from a design point of view, and wasn't something that, people necessarily, wasn't one of the top three things people raved about generally. So, so through 5, we've already served close to $500 million in volume in our first year. So that's sort of where we stand. Is like, look, there's promise to the mechanism, but really going forward for this next year is starting to apply this to more and more illiquid assets, where a lot of the trader pain point is right now that we get when we speak to these prop traders trading on chain. We speak to people who are sort of this next target audience that is looking anywhere actually to execute like promising project tokens that maybe aren't heavily listed on the largest centralized exchanges. Right now, they have an issue sourcing liquidity from normal centralized exchanges or OTC desks or other services, and we think it's the perfect question to answer. Like why can't the first best answer be on chain for this, right? Like a lot of the best DeFi protocols release their tokens first on chain when they're early. So why isn't the best place to trade them also on chain? And it's kind of ironic, right? So like I think we had a saying which was like, when we first launched Integral 5 last year, we prided ourselves as like, look, there's capability for the Ethereum ecosystem to actually host the best trading venues for Ethereum at size. Like, when we're talking about like $1 million trades plus. And in the first few weeks we launched, we did have these traders who needed places to buy and sell Ethereum. And we saw this happening. Like, I think our favorite user in history, this address has done about close to $20 million in spot volume, like in the first month when we opened full trading. And so, there's definitely capability for us to serve, to have the best places to trade be actually on chain. And I think the bigger long-term challenge is, how do we, as an ecosystem, like everybody, like all these projects, how do we keep that execution, how do we keep these financial outcomes really good on chain, but also do it in a sustainable way that, actually is a real alternative to centralized exchanges. And I think that's the biggest challenge that, not just our protocol, but others will face going forward. So I think that's sort of like, where DeFi 1.0 and 2.0 kind of meet, where it's like, hey, we want these things to eventually be decentralized, to be run by, the users can also be the operators, right? But like, the whole push of, I think, 2.0, like the past 6 to 9 months in DeFi is really like, hey, there's a chance to make things a lot more efficient. And so we see ourselves as like trying to embody like both values, at least when we think about it in the core team, which is, how do we get really good outcomes, but, decentralized and in a democratized way, like out in the open for the sake of, transparency, right? Like a lot of dark pools and OTC desks are private, but these large traders are actually trusting human traders who, by the way, gossip. Like, I'll tell you, once you spend time in the space on the trading side, people say all sorts of stuff at happy hour. So like, somebody's gossiping about your big trade. So if for those, $1 million traders out there, like if you do use, an OTC desk, no matter what type of guarantees they give you on paper, like it is visible by somebody, right? So just know that. And I think, in DeFi, we have the chance to build everything to be verifiable, or right now a lot of things are visible completely, but maybe maybe things will shift to be verifiable publicly, but maybe like details that are abstracted out. But still, like this is sort of the way I think services are going. If this whole space is actually, the thesis plays out for DeFi.
Great points, Dorsal. Really excited to see the growth for size, as you mentioned, already hitting $500 million on Integral 5 is very impressive. Congratulations to that. I'm looking forward to seeing the rate of growth for size and how many whales jump onto the on-chain, where I feel like it's something that they really want to do. And you said it, hitting the nail right on the head, where all of these coins and protocols that are coming out on chain, trading those assets properly should all be done on chain as well, in almost the same manner. So looking forward to seeing how your team continues to grow out with that. And we don't have a lot of time, but I would love to know the best way for people to learn more about this, more about the process that you guys have developed to make this efficient, fast, and more appropriately serving this clientele, because I feel like there's a lot more people that are going to be coming into the space with a large amount of capital, and they're looking for solutions like this. So with that said, what is the best way for people to learn more, use the product, and get involved with the communities?
Yeah, wonderful. I would say there's two ways to be involved as a user. There's the trading side. So if you are the whale trader out there, you might be interested in actually doing this TWAP execution we offer, on Size, and that's available at size.info. You can also just find all these links on our Twitter, which is @IntegralHQ. For the liquidity providers out there, you can also plug into the pools and LP side of these same interfaces on Size. There there's opportunity to be the counterparty to the whale traders, and you will what we have periodic rewards for basically earning integral governance tokens, and that's ITGR. That's two ways to be involved on the user side. If you're an NFT forward person and you're just learning about DeFi, we do have a collection that also launched around the same timeline as Size, which is called whalesquad.com. So it's the DeFi Whale Squad. And that's the profile picture you're seeing here. So that's one of them. This one is actually not that rare. It just has the builder hat, but which matches the story here. And integral.link is our landing homepage, where there are further tabs and footer links to documentation, our white papers, and kind of anything else that you want to poke around at, including like prior coverage and other kind of archive from when we launched last year. So I would say those are the best ways to plug in. And if you want to follow kind of my pseudonymous account, that's @0xDorsal on Twitter, which is part of building as a pseudonymous team is you actually get the chance to roll out different people on the team, and then allow each particular whale here to have their own personality. So that's part of what you'll see more of as you follow our team throughout the year, if people want to follow more on a team member by team member basis. So that's something we're rolling out as well. So I think those are the best ways to plug in. And thanks, Ashton, for having us here and giving us the opportunity to just talk about where we're headed, kind of how we got here, and our sort of, we pride ourselves on being sort of taking this a lot of the things like doing things pseudonymously, trying to launch in a fair launch way, which was something we did, and that's how we persist and keep growing. We launched the product first last year, and raised capital from our directly on chain from our early community and users. So that's sort of, something we always, think we would like to see more of in this space, but we understand that's kind of hard and not the prevailing model for everyone. But if anyone wants to reach out on any of these types of topics, and if you're a builder yourself and want to build cool things, feel free to reach out to either the team Twitter or mine. So yeah, thanks again, Ashton.
Awesome. Thank you so much, Dorsal, for coming on. I will leave all those links to Integral and your socials and the community links in the description box below. All the best with Integral Size and 5 moving forward, and let's follow up in the near future.
All right. Thank you.